To buy a private residential property in Singapore, the minimum down payment is 25%. Hence, 75% can actually be leveraged.
Therefore, for a $1 million property, the loan is $750,000. Is this too much risk?
Let's find out.
Hi, I'm Ivan.
And I'm Shawn.
And we are the co-founders of
Quadrant.
In our series of videos, we'll be sharing property investment knowledge, strategies and tips. So hit the subscribe button to stay updated on our latest videos.
And today's video is proudly sponsored by For the People Cafe. Yeah, thanks Ivan for sponsoring. Thank you.
So, is taking a 75% loan for property risky? Let's start by examining this situation from a different angle.
I want you to imagine this very particular scenario. Imagine going to the bank and saying to the banker, hey, I want to invest in crypto, gold, stocks, or even fine wine, right? And you say, hey, can you lend me money at a low interest rate? Chances are the answer will be a flat no. Right? And of course, if you ask again to the exact same banker and saying that, hey, are you able to lend me money on a property? Most likely you'll be able to get that 1 to 2% low interest rate just because of the fact that it is a property.
So, this tells us a few things about properties. Firstly, properties are still considered safe and secure investments.
And if I were to actually rank it into low interest rate, right, I think the property will actually be like around 1 to 2% interest rate. Business loans are typically around like 2.5 to 3.5% interest rate.
Pre-COVID is like 5%.
Yeah, pre-COVID is 5%. And then of course, personal loan, credit card loans are especially at like 20% per year. That's insanely high, and that's actually expected because think about it. If the banks actually lend you money on the property and you actually end up defaulting on the mortgage, the end result is that the bank can still take the property and sell it via auction and get back their money. But let's say for example for credit card loan, even though let's say you default the credit card payment and they can charge you all the interest they want, but if you actually have no ability to pay back and end up actually declaring bankrupt, the banks will have a very, very tough time actually getting back their money.
The advantage of properties is the ability to leverage with lower interest rates. For example, if my properties has gone up from $1 million to $1.25 million, this means a profit of $250,000 and I would have made 100% on my invested capital just based on capital appreciation.
Yes, but however, do note that leverage works both ways. Therefore, if your property price goes down by 25%, then you will lose all your down payment if you were to sell your property. But of course, do take note that we have not considered in expenses like stamp duty, renovation, etc. But in this scenario, as you can see, leverage literally can work both ways, and therefore it's advantageous to really understand how leverage actually benefits you when it comes to property investment.
And the key method to mitigating this risk brings us to the second point, which is do not overpay for a property. For example, don't buy a property at $1 million that is only worth $900,000. So how do we avoid this situation?
A quick and simple way would actually be to make sure that you sign an option to purchase and actually indicate that you will actually accept this option subjected to loan approval, or even things like subjected to the valuation matching the option itself. Actually, I have a personal story to actually share in this scenario. Actually, just recently, not too long ago, my parents just sold their home. And what happened was they actually sold it at $828,000, but end up the valuation was only at $800,000, and therefore because of this situation, the buyer actually came back, forfeited the option, and renegotiate a different price because the valuation was much lower than what they originally expected. So it was unfortunately they had to sell it at $800,000 instead of the $828,000. But the thing is that as you can see, valuation does play a very big role when it comes to property price and how much the buyer is willing to ultimately pay for it.
So the thing is this, if the buyer had put in this clause subject to loan approval, then they need not forfeit the deposit at all. So this is one small tip, right, to make sure your money go a longer way. And another thing to note is that even if you have committed to an overpriced property, the bank will not lend you money for the purchase price and will only lend you based on the valuation, as the appraisal will only reflect the true value and not the contract price.
For example, if you actually buy a $1 million property and valuation come back at $900,000, most likely the bank will only basically lend you 75% of this $900,000, which means that suddenly, for no reason, you need to come out an additional $100,000 to actually buy this particular property. Therefore, if you want to get out of trouble and not to actually get into any such situation, you can actually ensure that you put in this clause called subject to valuation. Therefore, you not only be able to get back your OTP money, you will actually prevent yourself from actually buying this overpriced property.
Therefore, this is especially important in the bull market because property prices may rise astronomically, but valuations may not catch up.
So remember, just put these two clauses into your option to purchase. This pretty much just protects your downside and you have very little risk to actually have this clause in. The only thing that I can think of is that for some reason the seller do not want these two clauses in the option to purchase and then they reject your deal.
Well, if the seller rejects adding these clauses, then you better do a proper due diligence on these properties because these properties may be properties that are hard to even get a loan to begin with. Finally, always remember to select properties based on strict and stringent criteria for a good property investment. There are 4 criteria for selecting a good residential property and we will be sharing about these criteria in our channel. So do remember to subscribe to our YouTube channel and do remember to give us a thumbs up for this video. We'll see you soon. Bye.